Guys, Ripple drops yet another bombshell acquisition that's got the entire crypto space buzzing, snapping up a specialized crypto wallet provider that's laser-focused on institutional needs. And it's all tying into this massive web of connections that's already linking up to around 30% of the world's financial infrastructures through smart integrations like APIs with global banking platforms. This isn't just some minor move, it's like the pieces of a giant puzzle snapping together, showing how XRP is positioning itself right at the heart of real-world banking transformations. And trust me, the folks who've been doubting this for years are not going to love where this is headed. I've been following these developments closely, and it's got me fired up because we're seeing the kind of momentum that could redefine how money moves globally, especially with all the volatility we've been riding through lately. From market dips to regulatory whispers, let's dive right in, because what we're unpacking today is how these fresh acquisitions and integrations are connecting the dots in the crypto world, proving XRP's utility in ways that go way beyond hype, and why this could be the catalyst that shifts everything for holders like us. First off, a quick shout out to all of you who've been rocking with these updates. Your likes and subs seriously fuel this, and if you're looking to grab some XRP, check out my go-to exchange linked down below. Alright, so here's the plan. We're going to break down this latest Ripple buyout, connect it to the bigger picture of their ecosystem expansion, sift through some eye-opening insights from key players on X about banking integrations and price implications, and tie it all back to why XRP's fundamentals make it a powerhouse for long-term plays. I'll throw in some analogies to keep it real, like how all the short-term market static is just background noise before the thunderclap of real adoption hits. And we'll critique those tired narratives from the Bitcoin crowd that try to box everything into digital gold while ignoring the revolutionary stuff happening elsewhere. By the end, you'll see how these connections aren't random. They're strategically building a network that's set to handle trillions, and that's huge for anyone passionate about XRP. Let's kick it off with the fresh news that's got everyone talking. Ripple just acquired Palisade, this institutional-grade crypto wallet firm, and it's all about beefing up their custody and payments tech for big players like fintechs and corporates. Coindesk.com. This comes hot on the heels of their other 2025 moves like rebranding Hidden Road and integrating it into Ripple Prime for spot trading of XRP in their stablecoin RLUSD in the US, which is essentially creating a one-stop shop for institutional trading and settlements. FinanceMagnates.com. Think about it like this. Ripple's not just buying companies. They're acquiring the tech stacks and client bases that plug directly into thousands of banks. We're talking connections to over 13,000 institutions through platforms like G-Treasury, which they scooped up earlier this year for $1 billion. X-Finance Bull. And here's where it gets really interesting. This Palisade deal is more of a tech play, bringing in advanced wallet infrastructure that's already intertwined with the XRP ledger, making it easier for big banks to handle crypto custody in real time without the usual headaches. TradingView.com. It's like upgrading from an old clunky radio to a high-fidelity system that cuts through all the static, allowing seamless, secure flows that institutions crave. Now, connecting the dots here, this acquisition isn't isolated. It's part of Ripple's master plan to reinvest XRP sales proceeds right back into the ecosystem. Something that's been a point of contention, but actually proves their model's genius. Remember all the flack Ripple's taken for selling XRP? Well, every crypto has sellers, but the key difference is Ripple channels that capital into onboarding more users and building infrastructure that drives demand for XRP over time. Unlike VCs dumping tokens from other projects and pocketing the cash without a care for the network, Ripple's approach creates a virtuous cycle. Sell some XRP, acquire tech or clients that bring thousands of banks online, and boom, more liquidity and utility for the ledger. Take this Palisade buy. It's expanding Ripple's custody offerings, making them a go-to for institutions needing robust wallet solutions, and that's directly tied to increasing XRP's role in settlements. AIinvest.com. Guys, think about that. If Ripple sells a chunk of XRP to onboard a heavyweight like Bank of America or JP Morgan, that's a no-brainer trade-off because it unlocks massive long-term value. It's like planting seeds in fertile soil, instead of just scattering them on concrete. And speaking of connections, let's zoom out to this mind-blowing integration with TCS BNCS, a core banking platform that powers over a quarter of the world's population. Yeah, that's edging close to 30% when you factor in the ripple effects of their multi-rail payments framework. At ZIF Crypto. This setup puts Ripple right alongside giants like Swift and Wise, allowing banks to use AI-powered smart routing to pick the fastest, cheapest path for cross-border payments. And guess what often wins? Ripple's is Rails, which can leverage XRP for instant settlements. This isn't hype. It's institutional-grade tech that's already signaling to banks worldwide that XRP is a credible API-compatible option for efficient flows. I've seen posts from insiders on X highlighting how this quietly connects Ripple to 25% or more of global settlement systems. And when you add in the Palisade acquisition, it's like lighting the fuse on widespread adoption at investor detractors, especially those Bitcoin maxis preaching digital gold as the end-all, won't like this because it exposes how limited that narrative is. Bitcoin started as peer-to-peer cash but pivoted when it couldn't scale, capping its potential, while XRP is built for utility that transcends arbitrary labels. Here's a personal take. Back when I first dove into crypto, everyone was hyping Bitcoin as the future of payments. But reality shifted, and now it's boxed into this gold analogy that arbitrarily limits its market cap to, say, $10 trillion. But guys, that's just words. Random narratives to make Wall Street comfy. XRP. It's the decentralized clearinghouse token enabling payments, liquidity, AMS, DEX, and more, all while being deflationary with its fixed 100 billion supply and transaction burns that reduce circulating tokens over time. Every XRP transaction burns a tiny fee, 10 drops or 0.00001000001 XRP to prevent spam, making it scarcer as usage ramps up, unlike inflationary models elsewhere. X-Investory, and with 55 billion in escrow released programmatically, it's transparent and predictable, contrasting the secretive dumps in other ecosystems. This ties directly to the theme XRP taking over banking means leveraging these fundamentals for real-world utility, like bridging walled gardens in private bank blockchains, where XRP acts as the neutral interoperable asset to move value without counterparty risk. Crypto Cosmos 23. Shifting to the hype-building side, let's talk about the swell 2025 lineup. It's stacked with heavyweights like BlackRock, Nasdaq, BNY Mellon, Franklin Templeton, and even White House reps, all converging to discuss interoperability and blockchain settlements. IOV Owl. This isn't a casual meetup. It's a signal of institutional buy-in with talks on trillions in opportunities through XRPL tech like Axiology, which is compressing capital market layers into one efficient infrastructure, and even testing for the digital euro. IOV Owl. Imagine unlocking 15 trillion in dry powder from deposits to fund memes, all while banks get compliant, scalable tools. That's the kind of transformation that positions XRP ahead of the curve. And critiquing the hypocrisy, while Maxis bash XRP for centralization myths, Ripple's open source ledger has passed amendments they opposed, proving decentralization and their transparency on holdings. Actually increasing to 4.87 billion XRP this year shows confidence in the tech. Sea of Owl. Now, on the price speculation front, which ties right into recent admissions, Ripple's leadership is straight up saying XRP needs a higher value to boost liquidity and network efficiency. Finance Broit Brad Garlinghouse nailed it. XRP's worth reflects what it connects, not who holds it. Meaning, as it bridges trillions in cross-border flows, the price must scale to handle massive volumes without friction. If XRP stays low, it limits the system's capacity. At higher levels, like the speculated $1,000, it becomes the oil lubricating a global engine, moving value instantly. This isn't wild guessing, it's math. Higher price equals more liquidity per token, perfect for institutional needs. And with Bitwise filing their Fourth Amendment for an XRP ETF amid SEC engagements, even during government shutdowns, its coordination signaling mainstream exposure. Finance Broit. Guys, think about historical parallels. Just like Amazon blew past oil giants because it wasn't digital oil, but an e-commerce transformer, XRP isn't digital gold, it's ushering an internet of value that could eclipse any prior asset class. Contrast that with short-term chaos. Sure, we've seen market weakness with Ripple unlocking 1 billion XRP from escrow recently, but that's programmatic and reinvested, not dumps. Coinidia.org. The rebounds are coming. History shows post-shutdown rallies like 10% S&P jumps, and with Fed reserves potentially flooding in, hard assets like XRP thrive. While maxes cling to blind spots, ignoring how their gold narrative caps potential, we're seeing smart money behaviors. Whales and institutions accumulating via these acquisitions, prepping for the boom. It's psychological too. Panic sells during dips. But zooming out, this turbulence is just the prelude to the big clap where catalysts like swell and ETF approvals ignite. Tying back to the thumbnail vibes, that buyout wow is spot on, with Palisade and G Treasury symbolizing the scarcity and institutional hunger. While they admitted it echoes Brad's price necessity and 1,000 speculation anchors the deflationary features like burns and fixed supply driving value as utility explodes. If you're digging this breakdown, smash that like and sub. It helps spread the word to more XRP enthusiasts. Midway. Reminder for grabbing XRP safely, that exchange link below is solid. Diving deeper into community buzz on X. There's this post from a seasoned investor, noting Ripple's meetings with top banks like HSBC and JP Morgan, auditing settlement savings on the XRP ledger, seconds instead of days, pennies instead of fees, and how even at $1,000 burns keep costs at a cent. Investory. That's reassuring in uncertain times. Countering feud by showing the tech's ready, just awaiting compliance tweaks. Another thread highlights how G Treasury's 13,000 bank network post-acquisition bypasses SWIFT, letting banks monetize with 90% plus margins via XRPL solutions. CryptoCosmos 23. Pros. Massive efficiency, global interoperability. Cons. Initial integration hurdles, but the significance. It legitimizes XRP as core infrastructure, not a side asset. Global perspectives add depth. Europe's CBDC trials with XRPL tech like Axiology show XRP's role in tokenizing assets and bridging jurisdictions compliantly, unlocking trillions in locked capital. IOVOL in Asia ties to SBI and Shinhan mean trillions in volume potential. Phil Glosky 31. This counters misinformation that XRP is irrelevant. It's solving pain points like slow settlements and high fees that plague traditional systems on charts. Without getting too technical, since we're keeping it viewer-friendly. Zoom out. XRP's shown resilience with rebounds of key supports mirroring 2013-2017 cycles where dips preceded massive runs. Patterns like consolidations before breakouts remind us short-term noise, crashes, volatility is just the market shaking out weak hands before the boom. Analogies help. It's like sound waves where everyday chatter is the hum. But big catalysts like these acquisitions are the thunder that echoes far. Addressing common pains. If you're feeling the despair from Maxis's echo chambers or recent dips, remember, this is where empowerment comes in. We're ahead with transparency and utility on our side. Novices think of XRP as the bridge in a vast river system. Experts appreciate how escrow and burns ensure sustainability. Wrapping this up on a visionary note, what we're witnessing with XRP taking over banking, covering that 30% worldwide through these integrations, is the dawn of an inevitable transformation. An internet of value where money flows freely, efficiently, and transparently, empowering communities like ours. It's exciting, guys. The future's bright, and sharing your thoughts in the comments builds that connection. One last tie to the thumbnail, that huge worldwide coverage and $1,000 nod. It's the visual metaphor for XRP's scarcity fueling 1,000-fold potential in this new era. Stay hyped, keep holding strong, and let's ride this wave.